Good afternoon. Good afternoon, everybody. I hope you can see the slides. Hope you can hear my voice if you're joining us for the live session, or if you're on the live stream. You're all very welcome. Welcome to Paul's Monday Market update number 218 for Monday, 16th of March, 2026. I hope you're all well. Hope you're all safe wherever you're in the world you're joining us from, and I hope you've had a good weekend and ready for what is going to be another eventful week in an eventful month in an eventful quarter in an eventful year. For those of you joining us for the first time, Paul's Monday Market Update is just that. It is me flying through as much as I can share with you over the next 25-30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest you might want to add to your watch list, and then having a look at the live markets. It is not a signal service, it's not trade recommendations, it's just me sharing with you what I'm looking at, which might be of relevance and interest to yourselves. As always, you are very welcome here, but just remember that you are always responsible for your own trading decisions. As always, if you want a little bit more help and support on your trading journey, there is the VTP Trader Accountability Group. Doesn't matter what you trade or how you trade, it's all about building discipline, accountability, and consistency in a small group. You can ping me for if you've got any points, or use that QR code there to take you to the page to join. Okay, next WFC, Wells Fargo. Why are we looking at this? Why have we got any interest in this at the moment? Well, those of you who've joined us on a regular basis know that whilst we've taken lots of look at energy and defense stocks and everything else that's going on in the world, one of the other kind of smaller, quieter stories that's not really been getting as much attention as you might think has been the kind of the challenges within the private credit market. Okay, we had a look at them. I think BlackRock last week. We had a look at Jefferies a few weeks ago. But I was reading something at the weekend showing that actually it's Wells Fargo who have the of all of those kind of major American banks that actually do have the sort of the biggest exposure to it. So I wanted to have a look at the chart, and as you can see, the chart's pretty interesting in itself. As I said, a weekly chart that has been pretty much, riding that overall trend there once again, that kind of weekly 50, all right, acting as great support until it didn't. Okay, great support until it didn't. So they are. Not only are they just private credit, but Wells Fargo. Wells Fargo, they are a major U.S. bank, right, and they have benefited from, let's say, those kind of extended higher interest rates. That has supported their kind of lending margins, but they have they are kind of still sort of trying to rebuild trust, rebuild a bit of a regulatory what would you call it, goodwill, following sort of, let's say, past scandals with them and other elements of the American financial system. But they also are a pretty good take on kind of banking sentiment, sort of, the strength or health of US consumer credit. And so basically the moves in Wells Fargo will quite often, they will track those kind of Fed rate expectations and the overall US economic outlook. But at the moment, as I said, I also see invariably that they're kind of starting to take a bit of heat from that sort of the private credit issues. And as I said, the 50-period moving average did not act as support there at the moment. As you can see, that invariably, we flipped it. Okay, we flipped it over the last week or two. Also, we cracked $80 from being up here at 98. And as you can see, kind of last week's was pretty much a pretty strong sell-off there, isn't it? And so if that's to continue, well, then, I start to look at us down here towards kind of $60 on the weekly 200-period moving average, right? And is that a bit of an indication of an overall sort of sentiment of US economy, US banking, US financials in particular? So, as I said, you might just want to add that to your watch list to see how that plays out with the sort of private credit issues sort of bubbling along.